What is more proven than we do the weekly outlook every single week? Most weeks the weekly outlook is always perfection. Why not just set an entry there? That's how you take a swing trade. And this is what I'm showing you over here with the primary and secondary draw. So today's a special one. We're going to be going over some of the theory on how I use my primary secondary draw method, and not only how you can use it on a weekly candle, but how I use it, why I use it, and the way that I actually navigate the market on any time frame using this. But more, let's go into the background on how this actually works and just what I use it for. Number one, we have to understand that everything that we do in the market is about having an edge, and this is no different. This is just an edge that I came up with because this is the easiest way for me to be able to predict high or low of the week, and that's the whole point of this, to predict high or low of the week. But then it became a little bit more than that. I can also now predict really good entries from this, and I can also predict not just high or low of the week, but also high or low of the day. But it all relates to logic. It's nothing to do with some special algorithm. It's just using complete logic and making sense of what is actually happening and how a candle opens and closes. And this is all something that I came up with completely by myself. And over time, I've been able to refine it a little bit more and more, and until we are where I am today with it. So this started a bit over a year ago, and I was just understanding that what we're going to go into is probably the easiest way for me to predict high or low of the week. Okay, so all starts with this drawing that I'm going to do over here. I've got this iPad in my hand so that I can actually talk you through what's going on in my diagram. So obviously it just starts with the logic that every candle has an open and close price. So where does price open? And let's just give you the example of this being on a weekly chart, because this is how I use it most of the time. Okay, so let's say that we are looking at a weekly chart. Okay, so where does price open? So we know that when price opens on Sunday at 10 p.m. UK time, okay? That's the first second of the weekly candle. So let's just say it opens over here. We don't need to say what price because we don't know what asset we're talking about. But let's just assume it's a random chart and it opened over here where I've drawn. Okay, obviously price is either going to go up or it's going to go down. And these are the wicks, okay, as you guys already know. Now, for the sake of this example, let's just say that we already expected price to be bullish. So you guys, if you're obviously in the membership and you're watching this, you obviously already know how to do a weekly outlook. So let's say we expected bullish price action on the week and it was a bullish price. So we're saying we are expecting bullish PA. Okay, expecting bullish price action. Okay, so logically that means that for this week we want price to expand higher. Our whole weekly bias is bullish. But what does that also mean? That also means that obviously if we're going to be bullish on price, we expect a low of the week to be made somewhere. Okay, and it's the same in the opposite. If we expected price to go bearish for the week, it would have had to make a high of the week somewhere as well, because it would have had to top out somewhere and then trade lower. Same if it was a bullish week, it's going to have to create a low somewhere so that it can trade higher. And this is where I bring logic into it, that for it to go higher, it's going to create some sort, or it's going to take some sort of liquidity. But when is it going to do this? Well, if we expect price to trade higher for the majority of the week, then most likely it makes sense for this low to be created some point at the start of the week. So, highest probability days for this, okay, So as we're saying we're expecting bullish on the week. So let's just go back and we're just going to write some facts about what we're expecting. So we're expecting it to be bullish. And then we also know low of the week will be created at some point because we want it to be bullish. And then we also know that price has to expand for most of the week higher. Okay? So most likely low of the week would maybe be made on Monday, Tuesday, or Wednesday. It doesn't have to, but this is all about probabilities. Okay? So, it's not just going to do it for no reason. Most likely, it's going to take a liquidity pool before it does any of this. So we have to think, where is this low of the week actually going to be created? And this is where we think about what I have as my primary draw. Primary draw is predicting this low of the week. Okay? Now, it's not as hard as it sounds or whatever. It's logic. And this is the difference between what I'm doing over here and anyone else's weekly profile. Mine does not have to be, oh, I could do this or this or this. It's just one thing. It's to do with the price. It's not to do with anything else. Whereas price, and then we can predict it from there. When price touches this area, it's most likely going to be low of the week because this is where most likely price will reverse in terms of where is accumulation actually going to be. Okay? This is daily and weekly time frames. We're expecting price to be bought up in this location. If we want a low of the week, most likely price needs to be bought up in this low. Okay, so where's that low? Okay, so it genuinely is, just as I said, let's go back to the example, is that this is the opening price over here. This is going to be your low of the week. So price is going to start trading bearish towards, let's just say we have a sell side objective over here. Sell side objective, sell side liquidity, yeah? And let's say it's just for an example of this, because we're going to go on another example, let's say it's a daily fair value gap. Okay, daily fair value gap is over here, and it's a sell side liquidity pool. And let's say like this is the area that is in the market. So price wants to expand higher for the week. Where is the low of the week going to be created? So most likely price is going to tag this area, take the liquidity, right? So this is a bearish candle, as you guys can see, that's what I'm drawing over here. And then since it has tagged the sell side liquidity and price is going to be bullish this week, it just wicks into it, just like we showed. So that candle turns into a wick, and then the rest of the week actually starts trading higher and becomes bullish. So this was your primary draw. That is your primary draw. And so what is the secondary draw? The secondary draw, okay, so primary was the first objective of the week for it to make low of the week because it's a bullish week. So that means making this wick is primary. So let's think of primary. Let's think of this wick as primary, and then let's think of the body as secondary. The wick is the primary draw and the candle is the secondary draw. And this is where things complete. This is how I complete my weekly objective. So let's say we had the sell side objective here. Now let's say we had our buy side objective for the week. And it's over here. So let's say we had some weekly array over here. Weekly F, V, G. And now let's say that this price has passed Thursday. And now we finally tag this. We finally tag it. So let's say we go all the way higher. We finally tag it, price goes all the way higher. and it tags the objective. This on the weekly candle is the secondary objective actually being complete. So secondary complete, and this is also where we could possibly expect to see high of the week when it's tagged. So that could also mean price has wicked into it, completed the objective, and then wicked down and actually created your low of the week, high of the week, and then your body. So it's all about literally just understanding that most likely if we want a bullish week, the low of the week is going to be made early. That wick of the low of the week is your primary draw. We can predict that by looking at arrays. When that array is tagged, let's say it's Tuesday, let's say it's Wednesday. Whenever it's tagged, that is most likely the day of the low of the week. Okay? The body that's going to expand, that is my secondary. And when it tags the objective, that's my secondary draw. Primary draw low of the week, secondary draw most likely high of the week, and secondary is the body. So the exact same what I've done over here could be done on a bearish, and we're going to go through the examples now. Welcome to an episode of the Weekly Outlook, and this is also going to be coupled with an educational video that I started recording last week. So obviously when you're watching this video, it's going to be all in one video. And this is where I'm talking about how to know where we get high or low of the week by using primary or secondary draws. Okay, so this is going to be a massive informative video starting from then, going through this week's Weekly Outlook, how I would implement it, and how I even used it last week. We're also going to go over the last Weekly Outlook and then what happened after it, and how you use all of these bits of information to piece it all together. So number one is that last week what we did. So one thing that I always stress is that we use the economic drivers to determine where price is going to go on the week, right? We know that if all week there is no news drivers, but on Wednesday there's a massive news driver, then most likely maybe there will be a few days in the week that trade higher or lower or expand, but most likely Wednesday is going to be the day that takes out a major buy side or sell side liquidity pool, right? That's just how it is, because that is the day that there's going to be volatility pushed into the market. So how did we use this? I'm not going to give you just old stuff. I'm explaining this in detail, and I'm going to show you live stuff. So this isn't old, and this is also live. So this is just last week's Weekly Outlook, and we're going to show you that and how we used this to predict where price was going to create a low, how price was going to expand and trade higher from that. So if you just see, I'm going to make this smaller, and I'm going to go on the bottom left over here. So as you see on the top right over here, that is me from last week explaining what I wanted price to do this week. And as you can see, we start by looking at economic drivers and price. So that's what we're going to look at, right? Okay. Economic projections, FOMC statement at 10 o'clock, 10:30, which is obviously 7 p.m. UK time. And that is obviously going to send price very volatile on the DXY. So this is why I would not be too bothered about, DXY trading higher without the FVG, when we know FOMC is the news event that is most likely to wick both sides. FOMC has the characteristics to take out both sides of liquidity on the delivery of price, whereas the other news, for example CPI, PPI, these ones, they usually move in one direction on the release. FOMC is the most difficult one to trade, is obviously announcing inflation rates, and usually price wicks both ways, both buy side and sell side objectives when the actual economic driver comes out. So this is why I'm not too fed up or too upset that price went higher today without coming into our point of interest on this daily, because I think that FOMC could be the reason for that to happen on Wednesday, potentially. So we will see what price does from there. GU is also so, as you guys can see in that video, I'm talking about, so this was recorded on a Monday evening. So this was the Monday candle, and I was saying I don't mind that price is traded higher here because I'm still expecting FOMC, because FOMC is the volatile driver of price. FOMC is what is going to make the market move volatile. So even though Monday had made this large candle, I'm expecting Wednesday to still come into here because of volatility, take out sell side into this daily FVG, create a low, and then start trading higher. How do I back up this? Well, let me just show you. Okay, daily outlook channel over here. Let's just move my thing back here. And what else do we have? We have me on March the 20th. Okay, so this was of the day, on the day of FOMC. I believe this is a realistic FOMC day. In general, FOMC will clear the build-up liquidity. I think we can initially see lower price to fill daily imbalances and then continue bullish order flow on the DXY. Okay? Why is this not just a normal chart? Well, as you guys can see, you've seen price trading higher, higher, and higher, right? We created on Monday a high, Tuesday a high, and then everyone at this point is thinking FOMC is just going to take this high out. Because of hindsight, now you guys can see where price is. It's like, okay, yeah, that made sense. But at this point, I'll tell you for free, a lot of people were worrying about what price is going to do here. Is it going to take out this high first, or is it going to take this high first? But I have told you a week before, this is what we can expect. Why? Because if price is bullish, most likely, and remember, we think in probabilities, not the fact that it could have just went higher. Yes, it could have just went higher, but we think in probabilities. Yes, it could have just went higher, but what is most likely for price to do is on a bullish week, take out some sort of sell side liquidity and then trade higher. So this is what we mean by primary or secondary draw. This is a clear-cut example of what a primary draw is. A primary draw objective is when we traded into here because why? Because we're bullish, so we're looking for a sell side sweep to create low of the week. Primary draw is what? Low of the week on a bullish week. So we are saying the primary draw is inside this daily FVG, and we should trade lower into it to create a low of the week. And then the secondary draw is what? Secondary draw is to create the weekly candle and expand. So where do we expand to? I'm saying at least we should expand to this high. That's what I've got over here. At least expand to this high and then potentially continue higher. Okay, that is your secondary draw for the weekly body to continue higher from there. So if you just think about this in an example format, how do you get high and low of the week? This is not a fluke. It's nothing to do with just time. It's to do with time, obviously, and price. And yes, ICT says this, but the way that I'm deciphering or doing this differently from anyone else is I'm trying to think about it as, oh, no, it doesn't matter. Like, I've seen other people with their profiles, they're saying that, okay, this is the Monday low of the week profile. This is the Tuesday low of the week profile. Ours considers every day of the week. Why does it do that? Because it's to do with the array, not the time. And let me explain. If this array that we've got marked over here, let me just make my camera a bit smaller. If this array was to be tagged on Tuesday, okay, then that could have been low of the week. If it was tagged on Wednesday, it could have been low of the week. The point is, it's the array that matters in context with the time. When did it touch it? So I'm not saying at the start of the week, oh, it could do this, it could do this. I'm saying when it does this, then it is most likely the primary draw and it's most likely the low of the week. That's why I'm so confident taking these swings on these news weeks, because I know that most likely this is what price is going to do when it touches the array. That is primary, that's secondary. If it happens on Tuesday, if it happens on Wednesday, it's most likely high probability for this to be low of the week or half the week, obviously, if it was on a bearish week. So that's not no fluke. You can see it. That's what I'm saying. Price should create a low here and it should expand higher from there. We'll look at the chart now. Obviously, there's no hindsight. I do this every week, but We're going to look at the DXY chart now on the daily. And what happened? What happened? On that same day, what did we do? We traded lower. We then created a low of the week on Thursday. So yes, what did I say to you guys? That it didn't matter what the time was of the day of the week. The array is how we predict it. Because it tagged it on Thursday and it didn't happen on Wednesday, I know that, okay, even though it's Thursday, now it's going to expand and it will make the body. What did it do? It traded higher and created the secondary draw. So in this example, how did we know where price was going to trade to at the start of the week? So as you see, let me just draw it over here. Like I've drawn a line over here. You're going to see why I've done it in a second, okay? So let me make my camera a little bit smaller. And I'm going to show you the exact same example that I was doing on the first video. So here is a little box. And this box is meant to represent a candle, okay? Why have I drawn it here? Because this is the price that Monday opens. So as you can see, this is Monday's daily candle. And if we go horizontally straight right, you can see that this is where Monday opened. So Monday obviously opened here. So primary draw was to create low of the week. How do you know that? Because this is where the array was inside this daily FVG. That's what we wanted anyway. So all we were saying was that primary draw was in here, and this is most likely where price will expand from. So price actually traded higher on Monday, right? And then Tuesday it traded higher to where it is here. Wednesday it traded even higher to here. And then boom. That then became all irrelevant at this point. It just created this wick. Then because of FOMC, the economic driver, it actually had a volatile movement in price. Let me make this a little bit bigger. It actually had a volatile movement in price. Then boom, Wednesday FOMC happened and it traded all the way back down to here, then creating a wick. And then Thursday had the momentum to actually come into it, create low of the week. And then what is that? So primary draw on a bullish week is low of the week. And then, as you guys can see, after that we traded higher to create the secondary. So all we're really trying to say, if you just take it in from this perspective, is that the wick of the candle that becomes is then going to be primary draw. Because then, as you guys can see, back to the weekly opening price, which was Monday, and then you do this, as you guys can see, we go to the weekly. This whole wick, let me just get rid of this line, hide. This whole wick over here, right? The bottom wick is the primary draw. And what happened after that? The body was created. That is secondary draw. So we know why this wick is there. This wick was there to take out price into the array. Yes, it happened on the economic driver, which was FOMC. That literally is primary draw. Why does that wick exist? That wick exists because it was tagging into the daily FVG array, then trading higher, expanding higher. So it doesn't matter that low of the week was on Thursday. It was on Thursday because it tagged the array because of the economic driver on Wednesday. If it was a different week that, let's say CPI was on Tuesday, for example, and price tagged into it, and then price traded higher, that would make sense too. But I'm not saying that price is always going to make low of the week on Tuesday, Wednesday, Thursday. Look at the array. Where's primary draw? Okay, when does primary draw get tagged? Does it get tagged on Tuesday? Does it get tagged on Wednesday? Does it get tagged on Thursday? This is most likely where you're looking for low or high of the week. Now, what else did I say? I want you to guys, let's go back to the daily thing. And I want to give you the bearish example as well. So I keep talking about bullish week, and then it's going to make you a bit confused about why and whatever. So here is GU. And I was saying that GU is bearish. I want GU to obviously do the opposite of DXY, trade higher into this daily FVG, and then trade lower from there. Okay, that's what we've been looking at. And I was also saying that FOMC comes, it's only really 50 pips away, and it's definitely going to tag that. That's not very much. And then as you guys could see, guys could see all the timestamps. I've said all of this live, right? That price should trade higher before trading lower. This should be high of the week. Why? Economic driver. 2, daily fair value gap array. So this is obviously taking price higher to create a high of the week on a bearish week. Okay? So it's sweeping out buy side liquidity before trading lower. Literally the opposite of what DXY did. Okay. Now we'll look at what GU did. And I have 2 GU charts. We'll use this one. What did price do? What did price do? Where was the daily FVG that we tagged? As you guys can see, it was this one over here. Now let's look at the chart again. Exact daily FVG tagged. Price traded higher. Creates high of the week. Same time as DXY. Trades lower to sell side objectives over here. And a secondary draw. Exact same thing. But this is just the bearish week example. Obviously, I'm just using DXY, which is inversely correlated with the DXY. That's why I'm confident about taking a swing trade. Because now let me finally put things into perspective for you. You know where your primary and secondary draw is because you're looking, okay, at the start of the week. Let's just do this as if I didn't call it out live. Which I did, obviously, as you guys could clearly see. Okay, so we, on this GU chart at this point, are already bearish in price. We've come into this week with a bearish bias. This is the difference between what we can do to the charts, whereas people that don't understand how powerful this is. We know that we're bearish on price. So we look at this array, just like maybe everyone else does. But we're not just looking at it, we're looking at this as the primary draw and where high of the week can be created because we know on the bearish week, price most likely at some point has to make a high of the week. Where does it make logical sense for the high of the week to be? In a bearish array. So this daily FVG, okay, we could come into here, create high of the week and trade lower. That's all we're saying. So what does that then become? This becomes your primary draw. Because what? That is the primary target. So it's literally the opposite of the first example. So that's your primary target. Right? That's your primary target. So we are expecting price to come in there and make, because this is a bearish example, a high of the week before coming lower. Okay? And then we want price to start expanding to our secondary target, which is the expansion. If we are bearish, where's price going to expand to? Lower, sell side. But why will it expand to, or when will it expand to the sell side? How do we know when to catch the move? After taking primary draw. So we're basically saying primary, high of the week, boom, low of the week. Secondary draw, the body and expand. Tell me what actually happens on the chart. Everyone else is thinking, why is price not targeted? Price is moving away from the array. When's it going to happen? We know when it happens. Economic driver doesn't matter. That's going to be half the week. Doesn't matter for Wednesday, Thursday, whatever. Boom. So next day happens. It's Tuesday. Everyone's like, oh my god, what the hell? Price hasn't tagged it. Like, it's just going to move away from the array. Nope. We know that's not going to happen because we have our targets. Where's the week going to expand to? And when is it going to happen? It's going to happen after. Boom. Then we take out into the high of the week. Yes, it maybe went a little bit higher, but still into the same area. Okay. Finally expands lower. Creates high of the week. And it takes out your secondary draw target. You can't make this up. Okay, someone can do this a little bit. It doesn't matter when this is happening every single week. I'm telling you, this is not some sort of algorithm. Trading is about making things easy for yourself. I don't give a shit if there's something out there that someone thinks that they know, like this is a secret, whatever. I don't care. You make things easy for yourself and just make it logical. If price is going to trade lower for the week, when is it going to make a high of the week? Obviously, it's going to make it before it expands bearish. And how does it make a high of the week? By taking out a buy side. Buy side is primary draw. Same example, but the opposite. How do we create a low of the week on a bullish week? Okay, well, we know it's going to create a low of the week in a bullish point of interest. So it's going to trade lower to tag into it, then trade higher. So yes, we say that most likely price is going to create low of the week on early on in the week, okay? But because of economic drivers such as FOMC week, this was a week that happened on Thursday anyway. This is a week that happened on Thursday anyway. Why? Because there was no economic drivers till Wednesday, and then Wednesday brought the volatility into the market. So we are saying that it's all to do with the arrays. It's all to do with the arrays in price. So yes, this is a very long video and a big example. Now I wanted to share the final thing. How do you use this as a swing? Okay? Well, where is your invalidation point? We already know how to get high of the week and low of the week. So then that got me thinking one day. What if on a heavy news week, you know that it's going to be hard to get in line with price intraday, 15-minute, 30-minute points of interest. So why don't you just, you know how to get primary and secondary draw now. Why not just set an entry at primary draw, because you already know where it is. You already predicting this to be high of the week or low of the week. Why not just set an entry there and then just put your take profit at your secondary draw? And this is exactly what we did on GU. So let me just show you what GU was. So we wanted what GU to obviously trade into the primary target over here, high of the week, and we knew it was FOMC week, so it's going to be hard to get in line with price. I mean, even if you look at a 15-minute, you can't disagree with me over here. This is the start, okay, FOMC or whatever, boom. And then what? You basically only had a chance to get in here on Thursday, and then boom. And we didn't really retrace. We did I guess, Asia session on Friday, which is not high probability anyway. So I'm thinking on these news weeks, why not just set an entry at the primary target before the week starts? So this is what we did. So here is the GU chart. And as you see, the primary draw target, which was the daily FVG, if we just go back on the daily chart, and I'm just going to bring price over here. This is the daily FVG. Just set an entry in the daily FVG. Price traded higher, taps it eventually, and then price just trades lower to my secondary draw target, and I hit TP. I didn't give a shit about the 15-minute, even hourly entries, because I knew that price is going to expand heavily this week. It's going to be consolidation this week, but most likely news actually taps me in. Most likely news actually works in my favor. Most likely news taps my primary, and then the next day taps, or the days after that, taps my secondary draw. So I'm not saying to do this every week, but I'm saying on heavy news weeks, you can actually use this primary secondary draw target, these formats, to actually just take a whole swing trade. This is literally just trading the whole weekly outlook in one trade, because we basically said that the weekly outlook should be trade higher, then trade lower. Where do we trade higher to? Into this daily FEG. Where do we trade lower to? This daily low, most likely. I just took it here because it's about 2.3R anyway. So I get tagged in. Now you're going to see like, okay, I didn't get tagged in on the daily FEG entry. Why? Because of time. This is where things come even more interesting. Here's the DXY chart. DXY closed over here without tapping it. The next day, it tags into over here. So actually, on GU, it already traded higher into the daily FEG, but I knew it was going to hold because this was my primary draw, and DXY hadn't tagged it yet. So on GU, I didn't actually set a limit. I waited for the FOMC news release to see, because I didn't want to obviously blow my account and do something stupid. So I waited for it to see how volatile it was. I seen it tag into it, right? As you guys could see, it was already in it. And then I market entered, because I seen where DXY is, and it was slightly aligning. This was where DXY was. So I just knew, okay, DXY is going to trade slightly lower, but I don't know exactly how low it's going to go. And GU, I'm just like, okay, where is my bias invalid? And my bias is really invalid at this high over here. So this is the daily FEG entry. So we're saying this is the whole daily FEG, okay? And this is obviously this 4-hour swing high. So that's invalidation. So I just enter off the array of primary draw, secondary draw. So if you just think about it, the way I've taught you guys weekly outlook, the way I've taught you guys this, it is just setting an entry based off of that. Let the economic drivers actually work in your favor, and you that's it. That is it. Okay. Okay, guys. So we're back again, and now we're actually gonna do this week's live outlook. And I just want to stress one thing. There's a few things that people are gonna do because this is what's happened, and sometimes maybe I actually stopped putting these drawings on my chart of what primary and secondary is. But I do it because it makes it easier. And by the way, there's the same with the fib tool, for example. I don't need to draw a fib tool because I already can see where the 0.5 is as soon as I draw the fib tool. I don't even need to draw the fib tool to find out where the 0.5 is. I can see it with my eyes. Same with primary and secondary draws. I don't need to mark out primary and secondary for me to be able to see it. Neither do you. You don't need to mark it out. As long as you know that this is most likely what I think is my high of the week. This is most likely where I think my secondary draw is. And that is it. Second, I don't want people to treat it like they think it's an algorithm, because I'm telling you it's not an algorithm. It is just the easiest way to decipher where price is going logically and using the economic drivers to determine when price gets there. So you use that. We know price is most likely going to get there when, during the economic or before the economic or to do with the economic calendar because of that. And we know where it's going to go to because of the array. So you put them both together and it's logical. My whole thing, everything I teach you is logical. My method, my M15 entry drill, everything's to do with logic. Everything's to do with making it easier for the human brain. Because I understand, especially after watching Mark Douglas, that you literally need to simplify your trading as much as possible to become profitable in the long term, because humans are not built to be trading and taking losses every single day. So I'm not trying to make the best trade every single day or try to look like a magician on the charts, but we end up looking like them anyway because we're doing it so surgically. I would use that word surgically. There's such a drill. It's just logic, literally all logic. Okay. Why do we take M15 entries on the daily, and why do I only take 2 hour when other people say that they could catch 10? Because I know consistency is key, and I've been doing all that dumb shit before anyway. So I've seen people do it. I've done it by myself before, but I understand that this is the key to longevity. Same with this. So I'm not saying it is the only way to become profitable in trading. Oh, I'm right, everyone else is wrong. No, I'm not saying that. But what I am saying is this is the most logical way for you to decipher where high and low of the week is. And what is more easier than, other people do swing trades. How high probability is our swing trade? This is the same thing I talk about with the M15. Other people will take trades, but how high probability is ours? It has to be as high probability. And people just throw that word around. What's an A plus setup? I don't give a shit what you think an A plus setup is. It's statistics. That's what backs this stuff up, yeah? It's not just what you think an A plus setup is. An A plus setup is a logical setup that can be repeated multiple times and is a proven strategy. Okay? So what is more proven than we do the weekly outlook every single week? Most weeks the weekly outlook is always perfection. Why not just set an entry there? That's how you take a swing trade. And this is what I'm showing you over here with the primary and secondary draw, because you already know where it is. You know when it's going to happen because of the economic drivers. So yes, sounds like a bit of a rant, but I made these videos in the past. This is nothing new to me. I did a primary and secondary draw video over a year ago. Okay, but this is just a more in-depth way in how I use it to do the swing trades. And I think now these mentorship videos, at the end of the day, I've been trading for 4 years, but I've been teaching properly like this for maybe 1. So I'm getting better at explaining things and better at being a teacher. And I've realized that my students really love the last few mentorship videos, because these are the ones where I've actually, I would say I'm just getting better at doing this. So obviously, human nature, we get better at things as we do them, and I think I'm getting better at just explaining things to other people, because I see these things for myself. Sometimes I just don't draw out these things on my chart anyway, because I can see them in my own head. As I said, I don't need to draw the fib tool to see where the 0.5 is. I can see it, Same with primary and secondary draw. So let's do the weekly outlook now for this week. So we're now on the charts for this week, as you guys seen the examples from last week. On how we used it and how we use the economic drivers to see where price is going. I want to show you the same examples for this week and how I'm going to use it. We're going to look at the economic drivers. So this week, as you can see, Monday, we don't have anything, and we know we don't really trade Monday anyway. We're looking at really red news events, and so Monday is not that bad. And then we have Tuesday. CB consumer confidence, which is it will move price. It's not as bad as PPI, CPI, FOMC, for example, but it will move price. So this is a good day to trade. Then we have Wednesday, which is not really got any large news events. And then we have Thursday, which has GDP, unemployment claims, which we like unemployment claims. And we have the pending home sales and revised consumer sentiment. So remember this, when we have these news events, this is most likely when price is going to expand and create the body of the weekly candle. Or this is where price is most likely to create high or low of the week, because as we said, price is going to tag these primary or secondary draws or to create high or low of the week and then expand when price is volatile. So use this weekly calendar, use the weekly economic calendar to determine what days are going to be the highest probability for you to trade. So last week we had FOMC, so I didn't trade Monday, Tuesday. Wednesday I started looking at the charts on FOMC release, and that's it. Took the swing. Thursday and Friday, that was it. Didn't really need to do anything. And not every week's going to be like that. FOMC is probably the largest news event. So on a week like this, I probably will be checking the charts a little bit more than I would last week. So the weekly economic calendar, the economic calendar for the week is kind of like a schedule for what days you're going to be looking at the chart. So I already know that Monday I'm not going to really be looking at the chart at all. But since it's not FOMC week, CPI week or PPI week, I will be looking at the chart on Tuesday. I'll be looking at the chart on Wednesday and Thursday as well. Thursday actually will probably be the most expansive day of the week. We'll see. But we obviously have quite a few news events on Thursday. So I think we'll see quite a nice... This is a good example of that. Because of this, we can see that Thursday is probably most likely to expand because of the amount of volatility it's going to show, right? And then Friday, we also have PC price index, which actually does move price quite a bit. So if you were already in a trade, maybe a swing or whatever, this would be pretty good. But this will be a decent day to trade as well. So Fridays without news drivers, maybe you want to stay away from. Monday, you should just not trade at all, as you guys know that. And to do with the primary and secondary draw thing, the reason that we don't trade Monday as a whole because of this is that when we're not trading the Monday, it makes it easier to predict where the primary draw is going to be after Monday has already made the high or low of that day. Because a lot of the time, the primary draw could actually be Monday's high or low. So here's TradingView again, and we're going to do what we want for this week. This is the DXY chart. As you guys can see, this is what we wanted last week. Trade into here, create low of the week, trade higher. And now it's pretty obvious where we're actually going for the rest of the month, hopefully. Okay, which is DXY to go for this buy side target over here, about 105. Now that is pretty obvious. We're in bullish structure. We started respecting bullish arrays again. And we really just want to see price continue to expand higher from there. Okay, so I want to see price continue higher from there. And on the weekly candle, as you guys can see, that we are going to hopefully take out this buy side pool in the next few weeks, or hopefully this week. And then from there, I think it's pretty much a straight clean run to the buy side objectives over here at 107. I can't see price coming above this high, closing above this high. This is what you want to see, us close above this high. If we close above this high and it's not a liquidity sweep, then most likely I think we're going to go all the way to 107.3. Okay, for the next few weeks or months after that, which is pretty much going to potentially start setting a top on Euro and GBP for a while. So on GU, what we want to see is, obviously this is last week's trade. And I already showed you this, that GU was amazing for shorts last week because of the framework that I showed. Taking out that buy side, and then going for these lows, that is still on the table. These lows are still not gone on GU. So this is the highest potential that I'd be looking at. And so GU, on the daily, it just looks like obviously expansion over here. We just want to see an obvious higher low of the week met. This could be a good area over here, above this buy side target over here, and I think this would probably be the daily highs, which it is. Yeah, daily FEG over here, small daily FEG. This could potentially be a primary draw, or the first area. As we said, what is primary draws? When we expect high of the week to be created and then price trades lower. So that could potentially happen. But because of the expansion, how hard the expansion actually was, we could potentially see price trade higher, obviously, to create high of the week, but maybe it doesn't trade as high as this. Okay, so we'll go back to the DXY. What should the DXY do? And I think that the DXY, this is going to make things clear, maybe possibly go into this array, under this array, or potentially to here. Okay, so go into the daily. What does that look like on the daily? It looks like the daily order block, around the daily order block. So I'm most likely looking for two scenarios. Now, number one, since we don't trade Monday, the FVG is going to be created. So let's say Monday does this. Okay, what does that mean? Well, that means that price has created a new daily FVG over here, and then Monday could actually create the primary draw and then start trading higher to the buy side target. That is a very high potential. This is a main reason why we don't trade Monday, because we can use Monday's range on Tuesday and have a very easy week. The second scenario from that is that we could just see this daily order block be the point of interest that is the primary draw for this week. That could be the area, this whole area as a whole, to be where primary draw or low of the week could be created. Because this is the area that the expansion happened. So as we see, this was primary draw last week, price traded higher, there was no FVG created. So we could just see price trade into here as a whole, start creating some sort of confirmation that this is going to be the low of the week in the primary draw, and then I would want to see price trade higher, and that would construct to GU doing the exact same thing, which would be creating a primary draw in here and then trading lower. So the example of doing a swing trade would be, you would see where DXY was going to go, where does it align with EU and GU. I see EU as well. Okay, then you would want to potentially take a swing from there. But since this week is not a week with major economic drivers in price, you don't need to do that. But why would this help you? This would help you is that you would have the confidence on the day after these primary targets have been taken. You would have the potential to be able to, and the confidence to be able to hold your trade to your full take profit, because you have a confidence in that this is the low of the week and this is the direction that I'm going to be trading in for the rest of the week to trade towards secondary draw on the body. So the example is that this is potential primary draw, where's secondary draw, your buy side objective, and where price should then go for the rest of the week, because this is the bias that you have. So secondary draw. So you want price to trade lower at the start, create low of the week, and then trade higher for the rest of the week, and then opposite on GU, as you guys could see. So this is what I would be looking for. And remember, I'm not saying that this is the be all and end all. The second scenario, this is why we're flexible on the Monday, is that we don't trade it, as you know, and then that could create the secondary option for where primary draw is. That could be the new point of interest created. We trade into there and then trade lower. So primary draw, low of the week, and then same on GU, that we could just create a daily FVG here, trade into it, and trade lower to secondary. So that's what I'd be looking at for this week. I hope this makes sense. If anyone has any questions, let me know. And that's that for this week.